Fadi, let me just pick up where we left off on Aramco. Let me just ask you a very direct question. Would you buy Aramco shares when they do finally come to market, whether it is the local market or whether it is an international listing?
I would need to assess where oil prices are back then. But if Aramco is under new form, like including SABIC and a vertically integrated company along the value chain of petrochemicals, it's a different story for Aramco. So it will depend on the shape of Aramco, and I think that's probably one of the reasons for the delay.
That's a very interesting point of view, because there is a sense that I'm getting out here in Asia as very interested observers of all of this, that the listing could be repurposed and repackaged where the downstream assets are spun off separately. And let's face it, that's where a lot of the value for Aramco lies, isn't it? In the downstream assets and the refining assets that they have been building out in high-growth Asia.
Correct. And Sri, to your point, I mean, the form of Aramco after a SABIC deal would be very different than before. So now you're just buying oil reserve and oil prices and a potential for oil and outlook on oil. If you're able to shift that to something along way more value creation along the oil value chain, whether it's on the upstream, downstream, or midstream as well, I mean, you have a very different company. Will they spin it off? For me, it sounds like even the SABIC could be convolution or could be actually a clear direction, and this probably remains to be seen.
And Fadi, when you look at the Saudi market in particular, a lot of movement, obviously, since that MSCI inclusion earlier this year, a lot of hype, foreign investors getting really interested. We're just coming up in a couple of months to this FII Davos in the Desert Summit. But at the same time, you have reports coming out of Saudi Arabia that, you know, the Crown Prince is hiding somewhere in Jeddah, that he's lost support amongst the people, or lost support at least within the royal family. A lot of questions over whether or not, even my colleagues asking me, are the wheels falling off here? But you're saying this is the best time to buy the Tadawul.
Well, there's always been a lot of speculation, and people like to talk about that. But I think if you take toll of what happened in the past 12 months since the first Davos of the desert, as you called it, a lot of things happen in Saudi. So we have an MSCI inclusion from a market perspective. We have a lot of social changes. We have the movie industry, cinema industry, entertainment. We have women driving that you covered very well, Hadley. So I think the change that happened in Saudi over the past 12 months, taking toll of that, have been immense. Now, what happened on the Tadawul side of things is at the beginning of the year, as I mentioned in your show previously, we've seen $3 billion of inflow ahead of MSCI, hot money gearing up for MSCI inclusion, which happened. Now, but concurrently, we cannot isolate ourselves from the EM crisis. So EM crisis has basically hit. Saudi has been, luckily, or maybe unluckily in that perspective, one of the best performing markets. So people stopped putting money EM, and Saudi is tainted with the same brush as all EM, despite Saudi having completely different, maybe opposing dynamics as EM. So oil prices are high, and that's a blessing for Saudi, but that's a curse for other importer of oil in EM. Their currency is pegged. That's also not the case of all the other EM markets that have the crisis, whether Argentina or Turkey, you name it. And the third thing is, while they're not affected by these trade wars and the tariffs, they're actually exporter of oil, importer of dollar. Interest rate hikes are actually not bad for them. They're not affected by them, whereas actually it affects all other EM markets, which have a US-denominated debt, need to print more money, creating more inflation, having to increase interest rates, and so on to protect their currency, yet not able to sell cheaper because they trade the trade wars and the tariffs. So if you look at all these dynamics, this doesn't apply for Saudi. Conversely, look at the fiscal balance of Saudi. So oil has spiked. Capital reserves are intact now. We're talking potentially of break-even revenue, break-even fiscal balance this year. We're talking about non-oil revenue at 36, 37%, 17, maybe increasing this year. And we're talking about a lower expense base, so still on track with the austerity measures, not using that oil frenzy to basically re-spend responsibly. So I think the dynamics of Saudi have not changed from a macro story. It's all of an EM crisis trickling down to Saudi, but I think soon enough it will diverge again, and then we'll see an uptick in Saudi inflows and eventually in Tadawul, and that's a great time to buy Tadawul for these reasons.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.